All right, welcome everybody. People are starting to fill in now. Good morning if you're on the West Coast, midday on the East Coast. We're just going to start in a few minutes, let a few people trickle in. We've got a very, very exciting webinar for everybody today, explaining really the new rules. If everyone had a chance to look at them on Monday, the SEC released not necessarily new rules, but temporary relief to the existing rules that I'll go over in full detail. So get situated. This should be quick. It should be around 15-20 minutes. We'll have time for Q&A, and I'll get started in just a minute or two. All right. Well, why don't we get started? First off, my name is Alan Jebsen. I am the VP of Sales here at StartEngine. I see everybody on the chat and the Q&A. So there's two functions, really. You can ask questions in the chat, or you can ask questions in the Q&A button on the bottom of your screen. I have both pulled up, so I'll be able to answer any and all questions. I might weave in some during the presentation, and we'll definitely have some time after to get to them. But why don't we get started? So welcome everybody to StartEngine's webinar. We're going to be discussing the the main rule changes or amendments to the rule that the SEC just announced on Monday, specifically to address the COVID times. So how can we help some of the requirements of the rules help businesses raise money quicker during these extraordinary times? So today we'll go over the financial requirements to launch. Those have changed with Regulation Crowdfunding, and all of this is around Regulation Crowdfunding. That's where the relief and the rules have been addressed towards. So the financial requirements to launch have changed. The time it takes to receive funds, that has changed as well. The limits of self-certified financials, and our StartEngine brand new 3-day launch program. So as you can tell with the financial requirements, the time it takes to receive funds, the limits on self-certified financials, all of these were existing requirements that now have been eased to help companies raise capital on StartEngine quicker. So it's really exciting. Let's get started. So the financial requirements to launch before, so as the rule existed prior to Monday, under Regulation Crowdfunding, self-certified financials were required to launch a Regulation Crowdfunding offering. What that meant was you have to have some sort of financials to launch an offering. If you want to set your maximum at 1.07 million, you can. But you would have to get a 2-year independent financial review completed. And if you wanted to, and that usually comes with, we see pretty much under $5,000 worth of cost. That's kind of typically the only upfront cost it takes to actually get an offering up and running on StartEngine is the financial review cost. Now, there was a part in the rule where you can actually launch an offering on StartEngine, not at the full 1.07 max, but actually at $107,000. But if you set your maximum at $107,000, obviously you're limiting yourself from the amount that you can raise, but you can actually launch an offering with just self-certified or CEO certified financials and start to raise up to that $107,000 maximum. So it was a really quick and easy way for, I'd say, smaller businesses to take advantage of this rule. Maybe they don't have the capital to start with a few $1,000s worth of cost to pay a CPA to launch, and just get up and running and start raising money. And then StartEngine actually allows companies to disperse on funds while your campaign is ongoing. So it was a really easy way to say, okay, now we can raise up to $107,000, disperse on funds, and then we can always extend the offering maximum once we have the funds to pay a CPA and get those financials in. But long story short, you needed financials to launch an offering on StartEngine. So now what the SEC announced is pretty much the most groundbreaking part of this rule. You now can launch an offering on StartEngine, set your maximum at $1.07 million without any financials. So you can go live with a full maximum of 1.07 million and provide no financials to the public. What the SEC did was basically take away the most burdensome part of the required onboarding for any company on StartEngine and say, it used to be required before you launched. Now we can defer it and get those financials after you launched. Now you're asking, okay, investors aren't going to see financials. I mean, that's a big change. What's going on? You cannot actually disperse on the funds that you've raised, even if you've raised $1 million, if you have not provided financials. So we would still be working with each and every one of you to collect those financials, collect the necessary documents. And then once we have them, submit them to the offering, file an amendment, let investors know that the financials are now available to view. And then once that process has been completed, now we can actually allow a company to trigger a disbursement. But the financials no longer burden us in the onboarding process. It allows every company to say, listen, I was waiting weeks for my financials to come back, or typically it takes weeks. Now what typically takes weeks on StartEngine to onboard and launch an offering, it can take days, because all we need now is just the minimum legal requirements, the corporate document information, and a campaign page that we can build and design and turn around for you very quickly. And we could start raising you money up to $1 million as soon as just a few days. And that really is the true groundbreaking nature of the relief of these rule changes. So the other big one is the time it takes to receive funds. So if you actually provided the financials, whether it's the financial review, if you want to start with that, let's say you already have the financials reviewed in the proper format, or you actually want to set your maximum at that 107,000 mark with self-certified financials, beforehand, you still had to wait until 21 days after your offering has been live. And if you've passed the minimum threshold amount of your offering or your campaign, which for every company is $10,000. So every company sets a minimum of 10,000 on StartEngine and either a maximum of the 107 or the 1,007 based on 1,070,000, excuse me, based on the financials that you've provided. But you had to wait 21 days to actually see the button on StartEngine in your StartEngine account to say request disbursement and take on those funds. Now the SEC said, listen, this is burdensome. We're going to take away the financials, but we're also going to, if you do have the financials, we're going to allow companies to disperse on those funds immediately instead of having to wait 21 days for the offering to be live. So what StartEngine then, when we heard about this, we went straight to our transactional partner and said, you need to cut down the clearing time of our funds that it usually takes for example, an ACH investment to clear or a credit card investment to be charged. Because typically when an investor submits an investment, it gets held into escrow. We clear the investment. We do all the kind of back-end plumbing to make sure the investment is cleared through know your customer and AML and all the things that are just boring to everybody. And then typically it could take a ACH payment 10 days to actually go from submitted to actually be cleared in order for a company to disperse on those funds. Now we're cutting that in half. So you now have the ability, if you do provide the proper financials, to actually start taking in funds even as quickly as 5 days or a week after you've launched an offering on StartEngine. But remember, this rule exists if you have the proper financials. Before, on the last slide, you can now launch without even needing financials and said, you know what, Alan, I'm interested in getting live as quickly as possible and raising up to $1 million as soon as possible. I'm going to spend the time while I'm raising the capital to get the full financials in. And then at that time, I'll be able to disperse on funds. To us, getting you up and running and start raising money for your business is the most critical aspect of StartEngine and why we exist, to help entrepreneurs achieve their dreams and start helping you raise the capital as quickly as possible. However, if you do have those financials prepared from the onset, now you can take in funds much quicker than you would have been able to before. Okay, and now when I talked about the 107,000 maximum, where you can go live with an offering with 107,000 maximum and just self-certify your financials, the SEC said, all right, let's ease those restrictions. Let's up the maximum there. So before, if you had the self-certified or CEO certified financials, which is literally just printing out your financials that you've compiled as an entrepreneur for your books, either from your Xero or QuickBooks account, and provide them in GAAP format, all we need is just a signature from you, the founder, self-certifying these financials before you can have the offering live on StartEngine with the maximum of $107,000. Now, the temporary relief changes to the rule allows you to actually increase that from 107,000 to 250,000. So going back to it again, if you do have the proper financials in the right format, and it only should take you a few days if you do, we now can get you up and running on StartEngine with 250,000 as your maximum and start taking in the funds immediately instead of the 107,000 maximum. So the SEC just upped the ceiling in which you can actually go live and start dispersing on funds without the full financial requirements necessary. So a big rule change. So just to kind of wrap everything up, there's two main parts to this. There is, if you have the proper financials, you can set your maximum now at 250,000 instead of the 107,000 if you have the self-certified financials, and you can start dispersing on funds and taking in funds immediately. You don't have to wait for the 21-day period. The second big rule change is you can launch an offering on StartEngine with no financials, set your maximum to $1,070,000, and take the weeks that it would take to provide the proper financials to allow you to raise up to the full maximum, which every company wants to do, and put that work on the CPA that you'll be choosing to get that work done for you while you're raising money instead of having it to be completed before. And I can tell you from personal experience from launching hundreds and hundreds of companies on StartEngine, the financials is the biggest piece of onboarding. Usually the terms and the valuation and the corporate documents, that's all something that we work with companies heavily on and takes a few conversations that can span a few days. And the campaign page building is something that's the fun, exciting part. We work with your assets. We build and design a beautiful campaign page with our campaign strategist that will be assigned to your account. And that, again, can take a few days to do. But we usually have to wait for companies to prepare their financials in the right way to then also pass off to a CPA to actually get them reviewed. And that whole process usually takes weeks. Now we can literally take that part, put it on once you're actually raising the capital, just worry on the legal, the terms, and the financial and the campaign page. And what used to take weeks to launch on StartEngine now is taking days. We're already going out to all of our companies in onboarding, speaking to them and say, we have the best news ever. And I know you're dragging your feet on the financials, realized it was going to take longer than you expected. We don't have to worry about that to actually get you up and running and start raising capital immediately, which is what every business needs to during these times. So that is the big rule change to, or the big relief to the existing rule change. And just so everyone's aware, as it's announced currently, it exists until August. So it's something to take advantage of as soon as possible. The ability to launch an offering on StartEngine, set the full maximum of $1,070,000 without financials required is a monumental change. And then if you have the right financials prepared and can self-certify them, now you can actually launch an offering with a 250,000 max instead of the 1,070,000, or instead of the 107,000 maximum, and start taking on those funds as soon as possible. So I'm going to open it up to questions now. I see the questions pouring in. I'm sure it's a little bit complicated, but I'll try to make things as clear as possible, hopefully with the aid of all of your questions. So you can ask the questions in the chat and also the Q&A function. I'll just go through each one of them and address them as they come in. So Gregory asked, will this recording be available later? Absolutely, no problem. We're going to be sending it out to our entire audience and everybody who's attended. Francesco, how long does the application usually take to get reviewed? It should take much quicker than it has to get back to you, Francisco. So I'm going to talk to my team and look out for your specific application. We're going to get back to you as soon as possible. Akalon asks, if StartEngine is not active in Canada yet, what are other crowdfunding options for Canadian startups? So yes, unfortunately, the requirements and the regulations of the Jobs Act do not allow us to work with Canadian companies. We speak to so many great Canadian companies we would love to work with. But check out this company called Front Funder. It's similar to StartEngine, but it's probably the largest equity crowdfunding platform in Canada, specifically for Canadian businesses. So Akalon, that is Front Funder, F-U-N-D-R, without the E. So check them out and tell them hi for us. David Stewart asks, what if you are a startup with no history? So that's a great question. That's something I didn't bring up. The temporary relief to the rules only qualify companies that have more than 6 months of operating history. What they didn't want to happen, they being the SEC, is these rule changes then kind of spurring a lot of brand new entrepreneurs with no operating history, with no real financials to share, to start raising on platforms like StartEngine and take advantage of these eased requirements. Unfortunately speaking, that means that if you have just started your company or you're less than 6 months operating, these rule changes do not qualify or do not apply to you, and we'll just have to onboard your offering in the traditional manner, which is you can self-certify your financials, or really just kind of zeros on the books because you're a brand new company, and set your maximum at the 107,000 mark, still have to wait the 21 days. Or if you want to get the financials fully reviewed, we would have to go through that weeks of onboarding process. So that is a caveat to the rule. Companies only qualify if they've been operating for more than 6 months. Anthony Sosa asks, what are the StartEngine fees? So great question about StartEngine fees. We're an application-based platform. So my colleagues will be reaching out to every company that's interested, learning more about their business, asking for your pitch deck, your financials, your cap table. We review every company internally in our investment committee meeting, and we have to make, unfortunately, some tough decisions with companies that we choose not to work with. But the ones that we are interested in moving forward with, then you start launching on StartEngine as soon as possible once the agreement is signed. Now we can launch in days, but the fees to actually get started are twofold. The first fee is a $10,000 service fee that is actually deferred out of your first disbursement on StartEngine. So we used to actually charge it up front, and now we defer it on the back end because we now are very, very confident in the companies that we choose to work with and the success we can drive them. And that fee really covers all of the onboarding and support that we provide that's really unparalleled to any other platform in the industry. So that's full account management and campaign strategist. And campaign strategist is a StartEngine team member will be assigned to your account and really be your crowdfunding marketing consultant and specialist. So you may have a great product, a great idea, a great business, but raising capital on StartEngine is different than traditionally raising capital on other means. You know, on the pitch deck, in the boardroom with institutional investors, with friends and family, it's crowdfunding marketing. You need to be fully prepared for, how do we prepare for launch day? How do we prepare for week one? And then how do we analyze and optimize your campaign every week thereafter? So that encompasses the $10,000 deferred service fee. And then the main percentage success fee that we make our fees off of are 7% in cash and 2% in equity at the same terms that you offer to the StartEngine shareholders. And actually right now, we do have the ability for companies to split that 7% in cash and put 3.5% on the investor. We've been testing it for about 6 to 9 months. You can think of it as an investor has a transaction fee in order to invest in a company on StartEngine, and we would collect that 7% from 3.5% from the investor, what they're paying, but the company, you, the founder, would only be paying StartEngine 3.5% out of what you raise. So the 3.5%, the 2%, and the $10,000 deferred service fee, that is our StartEngine fees. James Tulin asks a very important question. I see no benefit to the lack of required financials as no one is going to invest without seeing the numbers. So James, I'm sure a lot of other people have that same question. It's an interesting question, but we speak to a lot of our investors. Our investors make, you have to realize that most of the companies on StartEngine are brand new startups. They may have operating histories of a year, maybe 2 years, maybe a few $100,000 of revenue, maybe over $1 million of revenue. But for companies, for you to judge companies, or for investors to judge companies at this stage, is less about their financials and how they're operating their business, and more about the mission, the product, the story, and the industry they're trying to disrupt. That's really how a lot of investors that we hear from say they make their decision based on, or they make their decision before investing in a company. You know, a lot of times companies, when they're looking to attract customers or build a product market fit, the financials and the profit margin and what they're looking to achieve is not their primary focus. That usually comes later when you're looking to invest in a company that's already raised, you know, 20 or $30 million, or is on the public markets, where you really dive in to see, okay, how are they valued according to the PE ratios or their profit margins or the EBITDA. With startups, it's a little bit different. It's more of an emotional investment for customers, for fans, for businesses, or for the savvy investor that looks at, listen, I'm not necessarily concerned about the financials for the business. I'm more interested in what they're actually trying to solve and how big of a potential is this business. Anthony also asks, can you double dip, do the 250,000, then do a second round for 750,000? So you wouldn't even need to double dip. You basically would set your financials at the self-certified market 250,000, and then within the same offering, once you raise the full 250,000, you now can say, all right, I know I'm hitting that maximum, and I know I can raise more. I'm going to go and take some funds, pay a CPA a few $1,000s, get the required 1.07 million 2-year independent financial review financials back, and actually just extend the same offering and extend that 250,000 to that 1,070,000 mark. All right, there's a few more questions about the application-based platform. What StartEngine costs? I answered that. And Greg Johnson asks a very important question. Any updates on the SEC ruling to increase the Reg CF Max offering to 5 million? So Greg, we would have loved for this to be included as well. I think the SEC was under some pressure to make some changes right now to help entrepreneurs raise capital more quickly and easily. So these are kind of temporary relief to the existing rules. The fundamental changing of the rules, if you remember, was proposed even pre-COVID times. I think it was actually announced in early February, before everything really happened in March. So I imagine, and as if many of you don't know, the biggest change is the proposed change to the Reg CF rule, which allows companies to set their maximum not at 1.07 million, but actually to 5 million with the same financial requirements, which would be huge. So that is more of it's a proposed bill change. There's a comment period, a required 60-day period. The SEC gets all the comments back, they review it, and then they actually enact final changes. That's a little bit more of a bureaucratic process that's definitely important for the SEC to take their time with. But I have to imagine now, with their mentality of easing the current rules, they're going to be looking at expediting the final changes to the rules and increasing the maximum at 5 million. And who knows if we start to see a lot more companies be successful and raise on StartEngine with these temporary relief changes, they may incorporate some of these rules into the final rules just for years to come. So we'll see, Greg. Sophia asks a really important question. Do the investors need to reconfirm investments after the financials are provided? So yes, once you launch on a campaign on StartEngine and you do not have the financials and you start raising $1,070,000, once we have the financials available, we submit them to the offering, we announce it to the investors, and the investors reconfirm their investments on StartEngine. So just like if you were to increase our maximum from 250 to the million once you have the proper financials, or if you raise without financials, we would still be asking the investors to reconfirm their investment. This is a very normal process for the StartEngine investors. Usually companies do multiple disbursements and extend their offerings a few different times while they're live on StartEngine, which require reconfirmations. So it's a process our investors are very familiar with. These rule changes do now incorporate a reconfirmation, but typically a company on StartEngine goes through a round of maybe 2 or 3 reconfirmations in general. So it's not going to affect your campaign at all, and it's going to be really just a requirement that's a part of these relaxed, amazing rules. All right, Dennis Powell asked, we're a cannabis blockchain company that can't get a bank account. We can use crypto if this is okay for crowdfunding. So it's a little bit tricky. We work with our escrow and banking partner, and they have some restrictions as well. So we can talk to them about specifically if you're a non-touch the plant business. We work with cannabis companies, but if you are, it's going to be pretty tricky, and we're not going to be able to work with you. Howie, great to see you, Howie. Will people really invest without seeing financials? So I touched on that a little bit before, and isn't that critical to really help determine valuation? So financials are important to determine valuation. I think everybody understands that. Again, I think investors are more interested in saying, I normally don't get the opportunities to invest in private companies before. And even if I do, I don't see companies I don't see this many companies in this many different industries for me to really pick and choose from once I have the opportunity. I'm more interested in investing in a business that has the ability to show product market fit. You can talk about customer traction, that has a great mission and a great story to tell. And then listen, we can launch you without financials, but it doesn't mean we're going to stop working on getting those financials in. We recommend companies that are onboarding right now, let's launch you next week. Let's start raising the capital for your business now. And we're also going to start, we're going to continue, not even start, working with that CPA and get the financials back in a week or 2. So we can start presenting those financials very quickly, but we don't want to prohibit you from start raising capital from your business as soon as possible, especially during these times. Okay, Steve Vidal, if a startup has several years of R&D and other operating history, but no revenue yet, its launch is still several months off, does that meet the requirements of operating history? Steve, that's a great question. I don't want to speculate on that. I have an opinion on it, but I don't want to give you a definite answer. So please reach out to us and we'll work with our compliance team and our attorneys and get a specific answer for that, because I think that's a very interesting question. Katie, so you've been on the fence about raising capital. You're realizing you need to pivot and you want to understand if companies are in your position. Absolutely. Please reach out to a StartEngine representative. We can talk about what your current business is, the investor appetite we think there is on StartEngine, and then also what we think the pivot can actually accomplish with investors. If that's something that we've seen other companies try, or if it's a new vertical that we think can be really interesting, we'll be able to give you personalized insights into that. So please reach out to the StartEngine investors. All right, I'm just going through. There's a good amount of questions here, so I just want to cover a lot of different topics. Okay, so can the raise complement a Reg D 506C? Wayne, that's a great question. So we don't operate and work with companies that are looking to do a 506C Regulation D offering. For those that are curious, that's where an offering can only accept accredited investors. We've tried it in the past. It's a little bit more difficult. It's less streamlined than taking non-accredited investment and start clearing that investment as soon as possible. You have to go through verification, accreditation to make sure the investors are accredited. And ultimately, it's just not our core product, and we don't want to slow down the investor process, and we don't want to actually, provide headaches for the company, for you relying on us with a product that we're not, it's not our core competency. So Wayne, we don't do 506Cs. A lot of our companies on StartEngine raise and do a public offering at the same time that they're raising capital on the side with institutionals, with VCs, and have a 506C offering open, either at the same terms or at different terms. So you can absolutely do that, but on StartEngine, we don't host that product. Sophia asks, are marketing services included in the 10K service fee? So absolutely. That's where you're really going to be. A lot of companies hire third-party marketing agencies or consultants to say, listen, I don't really understand equity crowdfunding. I know crowdfunding is a different beast. There's a lot of these type of third-party services to help typical rewards-based crowdfunding campaigns like Kickstarter and Indiegogo. We took all of that knowledge internally. We compiled it into the campaign strategist role, and that campaign strategist is going to be assigned to your account and say, here's all of the best practices I've learned working with hundreds of companies on StartEngine and how to best prepare your offering to be successful. Okay, going through here. Is it a problem if we already attempted a CF during the past 12 months? Neil asked a great question. So Neil, the rule really restricts you to raise the full maximum amount of 1.07 million in the 12-month period. So if you haven't raised the full 1,070,000 in 12 months, you still have whatever you raised less than the maximum to be able to subscribe within a 12-month period. So reach out to us and we'll be able to provide you specific information based on how much you've raised in your previous Reg CF organization, or Reg CF offering, excuse me. David asks, if you're presently organized as an LC, do you need to convert to a C Corp? Great question, David. You don't need to. We definitely advise companies to do so. It makes sense for a lot of reasons. The two main ones being, you don't want to have the headache of managing potentially 1,000 K1s each and every year to your investors, and you'll be onboarding thousands of people to your operating agreement. And if you're going to be transferring shares, a lot of investors ask us, hey, I'd like to transfer my share into my niece or nephew's name. You're constantly going to have to amend your operating agreement for the new names on your in your business as members. And so the LLC really isn't organized to be a crowdfunding corporation. A C Corp is much easier to do that. Okay, let me scroll down here. Does the equity of the 2% change with the company's raise of 1.07 million, where the valuation is a widespread in millions, 2 million versus 10 million? So John, the 2% in equity is of the amount raised. So if you raise $1 million on StartEngine, at whatever terms that you offer to the general public, StartEngine will take $20,000 worth of those price per share. If it's $5 per share, for example, we'll take $20,000 and get that many shares. And StartEngine, essentially, you can look at StartEngine as if we invested 20,000 alongside all your other public investors. So it's not of the company. We're not taking 2% of the business. It's just 2% of the million that you've raised, which the million that you've raised and offered on StartEngine could be 10% of your business. So it'd be 2% of that 10%, to clarify. Stephen Page asks a great question. As an incubator, ever raised capital through StartEngine. So StartEngine actually used to be an accelerator before we pivoted into an equity crowdfunding platform. Stephen, we'd love to talk to you about that. We haven't done it before, but I think it's a really interesting idea for the public to invest in an accelerator or an incubator that's looking to then invest in startups that they may be specialized in helping. Okay, going through here. Satya, we're a 16-month-old AI and computer vision tech startup seed funded by 4 VCs and an angel investor. Won awards globally, congratulations. Tech partnerships with Intel and NVIDIA, but pre-revenue. Amazing. How do investors look at us? Well, Satya, definitely reach out to us. We've had a lot of companies that are pre-revenue, but have exciting things to share, exactly like what you put in the chat, and even more of a mission and story to tell. Some of our most successful businesses have been pre-revenue, B2B type businesses. So we'd love to hear more from you. Please reach out to us. Ralph, while obviously beneficial, is it actually required to have a separate marketing budget, or does your 10K fee include the actual cost of marketing? So it's a great question. Our 10K fee allows a company to put you in the best position to take advantage of the StartEngine investors and your own investors or network that you have access to. Because now, if you think about with regulation crowdfunding, anybody you speak to is a potential investor in your startup. That's the real benefit to these rules. And now these rules have been made even easier for startups to take advantage of. The StartEngine investor base and your network of investors or friends or LinkedIn or any type of network that you have access to should make up a portion of the offering. But let's say you're not a consumer-oriented business and you don't have 50,000 customers that already are brand ambassadors and champions, and you know that they're dying to get into this offering. We've had a lot of successful businesses take advantage of what's called paid media, running Facebook ad campaigns that a lot of you are very familiar with. But instead of attracting customers that businesses typically use with Facebook ads, we actually can run those ads and drive customers, fans, investors to your campaign page and start converting them into investors. And typically, if companies want to take advantage of that, which has proved to be very successful for a lot of our startups, you want to set aside a marketing budget. We recommend anywhere from $2,500 to $5,000 for an initial test of paid media. And then from there, you can start to scale up as you disperse funds on StartEngine. A lot of companies take funds out of what they've raised, take a percentage of that, put that back into marketing because you know you're getting a 500% ROI. And now you can start raising capital at a scalable way. Thomas asked, do you take investments from residents of countries, I believe, outside of the United States? Yes, we do. We're restricted by Canada and the UK, but every other country we can take investments from. Michael, we're in the wine import business with a game-changing model. It's ideal for changing COVID. Yes, everyone's at home, everyone's drinking wine. So Michael, we'd love to talk to you. I'm gonna go to the Q&A panel here. I know there's some questions in here that I may have missed. Cameron Crow, can you provide slides so I may use with my team? Absolutely. We'll provide the slides to everybody attended and our entire StartEngine audience. Thomas asks, why would StartEngine support a company without financials? Isn't that a huge opportunity for fraud? So we qualify for fraud in a lot of different ways, with bad actor checks, with different compliance requirements. The SEC isn't saying, hey, now it's a free-for-all, you can take investors' money without financials. That's absolutely not the case. You now can launch an offering on StartEngine without financials, but before the company can take in a cent from investors, financials will need to be provided. Investors are notified that the financials are available, and they'll have to reconfirm their investment when given the opportunity to review the financials. So absolutely not, Thomas. You don't have to worry about that. All right, going through here, I see a few duplicate questions. What was the name of your financial partner before? So we can refer many CPAs to you. You don't have to worry about that. We've got some great CPAs in our Rolodex that we can refer. Tamar, I have the self-certified financials at 107,000. Can I now increase to 250K, even though my campaign is already running? Tamar, that is a great question. I believe we can. We're getting confirmation from our attorneys on that exact question because there are a few companies on StartEngine in your exact position. So the ability to just right now increase from 107 to 250 would be amazing for your offering and a few others. So please reach out to us directly and we'll have an answer for you very shortly. Another question, I believe you said that we can get disbursements after the financials are in, unless the max is 107,000. So if the fundraise cap has 107,000 initially, can a company start getting disbursements and later expand the crowdfunding if it's being oversubscribed? In that case, the financials need to be certified before taking out any disbursements. So again, I know it must be a little bit confusing. You can set your maximum at 250,000 with self-certified financials and start taking in money as soon as possible. Now, it's not as easy as everyone may think about self-certifying your financials. We see a lot of companies try to do it on their own. They may not be experienced in putting together GAAP compliant financials, and it delays things a bit. What we're really recommending is for companies to launch an offering without financials, set your maximum at 1,070,000, and a few weeks later get the full financial review provided from a CPA, because you're going to look to do that anyway to raise more than 107 or 250,000 for your business. So you get that done a few weeks time, submit that to your offering, and now you're raising the full 1,070,000, and you launched on StartEngine in 3 days instead of 5 weeks. All right, a lot of great questions here. Are there any changes in S Corp maximum of 100 investors to allow crowdfunding to work for an S Corp rather than an LLC? John, so an S Corp actually kind of, how do I say this, automatically converts from an S Corp to a C Corp if you have more than 100 investors. So you can speak to an attorney about converting to a C Corp already, or it kind of automatically converts, and I think there's a little bit of legal cleanup just to make it smoother for you to convert from an S Corp to a C Corp, but really it's one and the same. We really recommend corporations instead of LLCs for the reasons that I mentioned earlier. Tamar, if I have self-certified financials, can I set my maximum now at 1,070,000? So great question. No, you cannot. If you have the self-certified financials, you have to set it for the 107,000 or the 250, especially if you're already live on StartEngine. The ability for companies that are onboarding on StartEngine to set the maximum of 1,070,000 and launch without financials is the real game changer here. Cameron Crow, what's magic about the August deadline? I wish I can answer that question. I'm not sure why the SEC has the August deadline. I think they're just taking this as we want to make something that can impact businesses now. And that should be for a few months and not just for a few weeks. But I think just like everybody in the US, we're taking things, on a step-by-step basis and how we react to the COVID time. So I think that's just kind of why August was their deadline. They could extend it past August if they start to see great results. Who knows? Jason Brents, what about special purpose vehicles? So great question about special purpose vehicles. Special purpose vehicles are not allowed in regulation crowdfunding. It's actually in the rule itself. You can look it up in the rule. So unfortunately, for those who are not aware, special purpose vehicles are sometimes used to group investors into one entity that's managed by one investor. You appoint an investor, and the company is really just required to communicate with that one investor instead of the potentially hundreds of investors. That's used in traditional fundraising means. I think when VCs and institutionals are afraid of what's called a messy cap table, because typically prior to equity crowdfunding, if you had hundreds of investors on your cap table, those are all investors with tag-along rights, anti-dilution, all these things that you don't know exactly where your money's stacked up on. With equity crowdfunding, you can have 1,000 investors on your cap table. StartEngine, we've actually done 2 crowdfunding offerings for ourselves on StartEngine. We have, I would say, close to 10,000 investors on our own cap table, but they all have voting common shares. So any investor, any institutional or preferred investor that wants to come on top of voting common shares or common shares can do so very easily. So the idea or need to group all these investors into an SPV isn't necessarily needed for equity crowdfunding campaigns. So that's our approach to SPVs, but it literally is, Jason, in the rules that SPVs are not allowed. Michael Gelvin, how do we apply to StartEngine to move on with a raise? So there is an application on our website. If you click Raise Capital and go through and fill out the information, and a StartEngine representative will get back to you within 48 hours. Aja Atwood, outside of the financials, what are the other upfront fees to launch? Great question. There really aren't any upfront fees. If you're looking to convert from an LLC to a C Corp, you'll probably have to incur some fees and pay an attorney. But if you're already incorporated as a corporation, it's just the ability to put together the financial review that is really the upfront cost. Otherwise, StartEngine fees are deferred on the back end based on how much you raise. We don't require any fees upfront to get started with us. Paul Kaufman asked, do we need a full PPM to do this? So Paul, we work with companies in putting together what's called the Form C. The Form C is what's required to actually file with the SEC to take advantage of these rules. The Form C is it's actually a pretty easy document. You can look it up. It has boilerplate templates on the SEC. But we work, that's part of our $10,000 service, is we'll be asking you the questions. Can you provide us your articles of incorporation? Can you provide your bylaws? Let's work through your terms and your valuation. We're going to build and design your campaign page. Let's look at your financials. All of that is questions that the Form C requires. Our job is to make it easy on you, ask those questions, compile that information, and take on the nitty-gritty of that and preparing the actual kind of Form C required. So you won't really be seeing that in your StartEngine onboarding process. We'll make it easy for you. And we'll take a lot of the information that's in your maybe current PPM or your pitch deck and use it for the onboarding, but you don't have to worry about doing any upfront work to be prepared with StartEngine. Sumit said, I applied earlier and came to the Founder Summit. Yes, Sumit, please apply again, and we'll be sure to reach out to you. John Kutzko, thank you very much for the presentation. Our company has just begun a Reg D 506C. Can we pivot and change the offering to work with StartEngine? Absolutely, you can. You can even keep an open and treat this as more of a marketing and PR move for your business. We want to actually attract the public to be involved. No matter what your business is, there are people everywhere that are really excited to invest in your business. So we can definitely work with you, John. Please reach out to us. Okay, going through a bit. Sean F. asked, what does it mean with the rule cannot accept investment commitments without financials? So Sean, I went over this a little bit, but I'd love to clarify. You can launch an offering on StartEngine in days without financials needed. You can provide the financials at a later time, and at that time, we then can accept the investments and disperse you the funds. So a previous question was, isn't that fraud if we take in investment without investors looking at financials? It's not, we cannot do that. So we have to provide financials to the investors at the point that we actually want to disperse you, the company, the funds. But we can launch your offering without financials and start marketing your raise and start letting the public know that this exists and how exciting of an opportunity it is. And then at a later time, we can actually disperse you those funds. Howie, what is the status of the potential secondary trading market? So we've got really, really exciting news that we're about to launch, or we're about to announce the secondary market. So please stay tuned for that. It's coming sooner than you may think. Jason is asking a clarified question on our fees, the 7%. So Jason, you have the option to split the 7% that StartEngine charges into 3.5% being taken out of what you raise and 3.5% being put on the investor in order to invest. So if the investor is looking to invest $100 at $10 per share to get 10 shares in the business, for simple math's sake, they would be investing $103.50 in order to get the $10 worth of shares. So that's the way the 3.5% works. It's been on the platform for, like I said 9 to 12 months, and we haven't seen any investor drop off, conversion rate drop off that would affect our ability to think of a different fee structure there. Okay, going through. I think I'm seeing a lot of the same types of questions pop up that I answered before. Robert, do the emergency rules apply to revenue share debt offerings or only equity offerings? All sorts of offerings, Robert. Whatever your offering is, StartEngine doesn't allow safes to be offered. The SEC is actually banning safes with the new proposed rule changes. So that is that's a big change, but revenue share debt, usually that's for more retail businesses, but we certainly have done those offerings before. And yes, the rules would apply to whatever securities that you'd be offering on StartEngine that we permit. I'm going to go back to the chat. I see a few questions trickling in, but just a few more before we wrap up. If you have any more questions, please reach out to us directly, and we'll be sure to set up calls with each and every one of you to talk about your business and see if it may be a fit. Sophia asks, how long does it take to set up the escrow account? That's immediate, and that happens on StartEngine, and you don't have to worry about that. Thomas asked a really good question. Would you recommend doing a Kickstarter campaign in conjunction with a Reg CF raise? As Howie knows, our previous question that I addressed, a good friend of ours with a great business, we don't recommend that, because the same person that you're going to be marketing the investment opportunity is going to be the same person that you'll be marketing the Kickstarter campaign. If you have to think about, really the benefit of StartEngine is that you can attract investment from your fans, your customers, your family, your colleagues, the general public. Anybody has the ability to invest just a few $100s into your campaign. So you don't want to confuse the marketing channels and the investors of, okay, well, do I put money in the Kickstarter campaign or do I invest on StartEngine? And what should I do? And also, you can do 2-in-1 on StartEngine. A lot of companies are really successful with setting perks that are tiered based on the investment levels, similar to Kickstarter, where Kickstarter says, hey, if you donate $250, you can receive this level of product. And you're just getting the product for the money you put in. On StartEngine, you can invest $250, get the same product, and actually get equity in the business. Or if the math doesn't really work out for your margins, at the $500 level or at the $1,000 level. So you can do exactly what Kickstarter allows you to do on StartEngine, and also allow people to be more bought in, to become vested brand ambassadors and investors in the offering. So hopefully that helps answer the question. All right, and let's see, just last one here. Does StartEngine allow for IRA investments? Great question, Jeff. We are about to roll out that feature. You can do self-directed IRAs at the moment. So currently, if you have your RRA set up for self-directed, you definitely can invest through there, but we want to really unlock all the traditional Roth IRA accounts out there and allow investors to invest in StartEngine offerings using their ROA capital. So I want to sincerely thank everybody for joining, all 100 plus of you. Hopefully this was informative, shed some new light on the really, really exciting rule changes or temporary relief to the current rules. To clarify, you now have a quicker time to disperse on funds. And then you can launch an offering on StartEngine in days, not weeks, but literally in days without needing the full financial requirements. And that is the huge, huge improvement to the onboarding process. And we want to thank the SEC for allowing StartEngine to allow and make it easier for our entrepreneurs to raise capital. So the ability to actually launch an offering without financials in just days should be a huge, huge revolution to the entrepreneurial landscape and how we look to help each and every one of you. So thank you everybody for attending. The slides will be emailed to everybody who attended and our entire audience, as well as the entire recording of this webinar. And please, please reach out to your StartEngine representative or click the Raise Capital page, and we will be in touch very shortly. Thanks everyone, and have a great rest of your day.